Welcome back. Today we are focusing our attention on, how long do we hold these stocks? How long do we hold our option contracts? Whatever type of plays we're making, how long do we hold? Which is a very important thing to understand. I'm going to start off with just going over a few, general fundamental concepts. All right. So the first thing is, how long should I hold? There are 4 different types of trades that you can make throughout the day, or 4 different types of trading that you would do or would consider, right? The first form is scalping. Scalping is a form of day trading. What scalping is trying to, if I go on a 1-day chart, is trying to sell from or buy at this point and sell like right above it. Okay, it's really just that the definition of scalp is small, very small intraday plays. You're trying to get it to go from $22 to $23. That is what would be considered a scalp, but that is also a form of day trading. When it comes to that, you're only holding those type of plays for seconds, minutes, and your percentage gain that you want to get is usually less than 1%. If a person can knock out 1 to 5% in a scalp, that's a great scalp play. Scalping is a form of day trading. And then you have, secondly, you have the day trading, which you will hold these. These are intraday plays. And by intraday, I mean plays that you make during the same day that the market is open. But for this, you will be looking to hold these for minutes or hours, throughout that day. Meaning you may have bought at this 32.41. I know I have Amazon as an example, but you may have bought at the 32.41 and sold at this 32.54. That would be considered a trade in which you bought at 2 o'clock and you sold a whole hour later. So that would be considered day trading. The third part is swing trading. Now with swing trading, people like to say you can swing trade intraday. You can, but that's not the definition of swing trading. Swing trading is, usually going within, let me get a clean chart actually that I haven't, let's use FedEx. I haven't done any analysis on them just to make it clean. But when you swing trade, you're really looking, to hold at least overnight, anywhere between 1 to 5 days and a couple weeks. And when you are looking for your percentage gain, you are really looking for that 5 to 30%. And I know I didn't mention this. I skipped over it in the day trading segment, but yes, minutes to a couple hours, but your average percentage that you want to look for is at 5%. Once you become a better trader, it's easier to get 50% plays in the same day, 100% plays in the same day. There's a technique to that in which we'll go over in this same video. But ideally, if you can get 5% on a trade during the same day, take your profits, especially if you have a small account. So sorry I had to flip-flop, but going back to the swing trading, 5% to 30%, you are holding 1 to 5 days, a couple weeks, sometimes months. If you do swing trade options or stocks over a series of months, you are considered to be making leap plays. And by leap plays, that is exactly what I just described, which is making a play, holding it for 1 or 2 months, and then selling. You are really capturing the big move. That is what swing trading is. You are capturing the big move of the stock. You are not looking for the day-to-day dips, but you are looking just for the big moves. Now, as an investor, slightly different. With investing, you are looking to hold months to years. Like I mentioned before, you are looking to capture the big movement of the stock. If you believe it has growing to do, then you will purchase and you just plan to continue holding. If you can make 15% back on each stock that you are investing in your portfolio, that is a great return on investment. A lot of times you may get more just depending on the stock, but if you can get 15%, I mean, really, if you can get 10% on each stock that you own, that's great. That's great return. It's better than your money just sitting in a checking account and not making any money. So investing, swing trading, day trading, scalping. If you have questions, make sure you put that in the Discord group. But like I said, you can focus on these smaller percentages. When you get bigger, you can go ahead and start waiting and, you know, possibly holding on to things a little bit longer. But as you're growing that small account, you want to just focus on getting that 10%, 5%, 5%, you know, 30% big win. Maybe you get 100%, but then, you know, you just want to build. You want to build and you want to be consistent. Now, the second part of this, when it comes to knowing how long you want to hold, is you need to know a few things before you even enter the trade, before you even buy anything. You have a few must knows, right? The first one is you must know your selling percentages. By selling percentages, I mean, you know, at what point am I going to sell this stock? You know, at one point am I going to say, you know what, this is enough money, I'm out. How I break my stuff down, I do 25%, 50%, 100%. 25, 50, 100. If I go up 25, I sell a contract or I sell a few shares. If I go up 50%, I sell a few shares. And then at 100%, I'm holding on to only a small amount. Now, if you have a small account, you may only be able to get a small amount of shares, or, you know, one share or one contract, which means that you just have to find that number that you are going to sell, you know, whether it's 25% or you wait for 50%. I always tell beginners to let it go at 25%. You know, you are focused on growth. Now, this isn't for investors. If you are investing in the company long term and you are up 100% on that company, I would recommend you add. I will recommend you add at the first sign of a dip, you know, or a retracement. Now, the other technique, like I mentioned before, when it comes to selling, is that if you wanted to, you can add to your contract when it gets to 25% or 50%. And you only add, one, if you have enough capital to do so. Two, if you feel comfortable and once you've seen the confirmation. Usually by the time a stock gets to a 50%, it's either ready to sell, or you can add to it, or you can also, and I'll put this down in parentheses as well, you can also roll your option. So the other technique that I mentioned before, when you get to that 25%, 50%, or 100%, is you can always add to the position for more gain. But when you add, you have to set stop losses. Regardless, you should have a stop loss on your contract or shares already. But let's say if you go up 25% on the contract and you're like, man, this is really gonna go green, then you can also add to that contract, add on some more shares, and then say, this is my maximum loss. And you can set an order on your brokerage app to basically sell automatically when it gets below a number. So that way you don't go from being up on the contract to being red, if that makes sense. Okay. And when you do add, I always suggest, remember, we are swing traders. You can add intraday too if you're day trading. That's not the issue, but focusing more on swing trading because I want to help people develop a solid base, you know, the fundamentals and just understanding how to be profitable in the stock market. When you add, I always say wait until the end of the day or end of the week, because sometimes you can add during the same day, midday, and the stock ends up selling off by the end of the day. And you could have had a better price if you just waited till the end of the day, or you could have realized maybe I don't want to add on it because it dropped so hard. I'm gonna type out an example, and then I'm gonna go to the charts and do an example as well. So with this example, let's say you have company XYZ, right? And company XYZ you bought for $50. Let's say midday, now it's up to $100, right? Which is a 50% gain. At this point, you have two options, right? Option A, easy, sell. Take your the $50 that you made, you put in 50, you cash out 100, just sell, right? Second part that you can do, the second thing you can do is add more shares. But when we add these shares, remember, right now we're up $50. We're up 50%. I don't want to lose my $50 when I add more shares because I'm not selling it. I'm adding more because I think it's going to keep going up, right? So when I do this, since I'm up $50, I'm going to set a stop loss to $20. So that way when I add and it starts dipping, that $50 I was up, it won't go below $20. That way I can still have it sell automatically and I'm still able to cash out everything with an extra $20. So instead of me being able to make the 100% here, because that was before I added, instead of that, I would set a stop loss at 20. So instead, I will only cash out $70. The other technique that you can do, you can roll over your contract. This is a technique that will be discussed later on in the option segment because this is a little more advanced, but you can roll over your option contract to be able to keep some of the profit and stay in the play. But rolling over the contract is something that you will learn in the future. Okay, so this is just my example when it came to Amazon and how I play Amazon. And some people may say, oh, these are just notes taken after, just to show you. On the 28th, bought 32.27 Amazon, or bought it when Amazon was at 32.27. I bought an Amazon call, sold it. I was up 50%. It was actually a little bit over 50%. And then I swung another one that was overnight and got a 20-point gap up. And then I sold that one at the open for another 30%. Okay. Now, I say that, I want to show you that because I do have all my markings in here, but I just want to make sure that you really understand that this was all prep based. I knew my every single move that I was going to do in Amazon. And when you're playing with a bigger capital stock, you have to really know the ins and outs of everything that you're going to do. That's why you see all these different marks that I have on my screen, right? So for me, let's start off with this day. Amazon dipped in the morning. Wasn't a harsh dip. I wanted to get in on this play, of course, but my magic number here was 32.27. I was like, all right, if it gets to 32.27, if it passes and holds against or from 32.27, this is when I will purchase, right? I entered on this following candle here. And I do that because, yes, I was waiting for the 32.27, but I wanted to make sure that next candle started above it. Because if it started below it, then it's a potential downtrend happening and it may be a fake out. But it started on top of it, so I bought in. I set some marks for myself. It got past my first 32.41, 32.53. My goal for this play was 50%. So I set the marks, and these are also alerts, but I set these alerts here. I just wanted it there. As I'm watching the stock, I see what levels is going past. My ultimate goal was 50%. I didn't know exactly where it would be at that 50% mark because, Amazon premiums can go crazy. But 50% for me was this 32.60. And this is where I sold one, and it kept going. And I just want you to understand that when you sell something, it's okay if it keeps going. There's always another play. Just remember, it's always okay if it keeps going. I'm actually going to say that one more time for the people who are watching because I really want you to understand that it's okay if the stock keeps going. There we go. It's okay if the stock keeps going. My typing is not the best. Now, and I say this because there's always another play, right? I sold for 50%. And then what I did was, and this was during the day, I just set a level that I was like, if it stays above this number, it looks good to swing overnight. I knew that if it stayed above this 3276 area, I knew that it would continue to be bullish because it ran, it hit its top for the day, but it consolidated, but it didn't dip too hard. And even at the end of the day, it still didn't dip too hard. So for myself, this was confirmation. And as you see, towards the end of the day, I re-entered literally at the end of the day. I know this candle is the 15-minute chart, but I entered at like 3:48 p.m., like right before the market closed. That way, it just gave me the best chance to get as close to that morning gap up as possible. And what happened? It opened. It popped right in the open. I actually didn't even wait for it to pop in the morning. I really just, as soon as the market opened, I sold, took my profit for another 30%, and I watched. I put a circle here. This is where I wanted to come back in, but it sold off, all the way back down to the entry, and that's not bullish, so that wasn't a play. No more overnight gap ups for me. I didn't want to worry about that. So I just let the play go, and I'm on to live another day of trading. I say all of this because it's all the same. Your must knows. I knew what I wanted my selling percentages to be. I knew if I was going to add another contract or what my stop losses were. You saw the example of how you can play it. You can't just sell and be out and then wait to re-enter, or you could try to add on more contracts. To be honest, this wouldn't have been a bad play to try to add on more contracts, but Amazon is a big stock. I would just rather just take the money and wait for the next time to re-enter, or just wait until another day to play. Because sometimes re-entering a stock when you should have took profits, costs you money. So yeah. So in terms of how long you should hold, it depends on what type of trading that you're doing. But at the end of the day, just know everything about the play and what you want to do before you enter, and that will help you decide how long you need to hold. All right, that's all we got today for this lesson. Let's go ahead and move on. If you have questions, put it in the Discord, and continue to educate yourselves and continue to do well. Talk soon.